First, let's start with what the landscape is looking like because TCS just is looking to lay off 2% of their global workforce.
In the past, always what has happened was a transition, right? So you're transitioning from one technology to another. This is the first time when efforts are going down, and that is the reason why all the global tech and the Indian tech all are talking about cutting the workforce.
Is the reason that people are not upskilling themselves, or is there some other reason? And what do you see as the way forward?
AI has directly jumped from machine language to natural language. So I'm not saying they have not upskilled themselves. They may have skilled, but you don't need them anymore because AI is coding down 30% of the codes.
It took only 4 years for Nvidia to see a massive jump in revenues, right? Do you think that companies like TCS and Infosys, the turnaround can happen over the next 2 to 3 years?
So we cannot absolutely compare because we're in different businesses. The only challenge is we have to take that call that, we pause the distribution of dividend or the buyback for some time.
Why are they not doing it already?
People like us and investors don't allow them to do, because if their profits fall, we don't take R&D spend and spend. We say that is a lesser profit. We don't see it as an investment.
Pickup in GCCs has been rapid in the last 3 to 4 years. You think that could be a threat to Indian IT companies? Hey guys, welcome to the Money Mindset. Now, the big story last week was India's largest tech company, TCS, laying off 12,000 employees in the middle and senior management, which is 2% of their global workforce. Now, experts tell me that much of the traditional outsourcing like manual testing, support, low-level coding is being automated rapidly across the world. Business is slow, deal sizes are declining, and project ramp-ups are being delayed. So the situation in the tech sector is grim, and the worry is that other larger tech companies will follow suit with layoffs over the due course of time. Now, world over, actually, layoffs are rising across big tech companies, whether you talk about Meta, Intel, Amazon, and the likes. The situation has gotten worse. But what exactly is happening and what is the way forward? We're going to talk about all of that today. Today on the Money Mindset, we have someone who has tracked this sector for over 2, maybe even 3 decades. And he has at one point in time been a big bull on the Indian tech sector, but now he has a different view. Joining me on the show today is Sandip Agarwal. He is the partner and fund manager at Sowilo Investment Managers. He is a chartered accountant with over 23 years experience. He's worked as a technology analyst for over 12 years, serving mutual funds, pension funds, insurance funds, both in India as well as globally. So today he's here on the show. I'm going to pick his brains about this sector. Also, the Money Mindset is a part of the 01 network, where together with 01, I bring you the best and brightest minds in the world of business to help you learn, educate, and build wealth for yourself. So if you've been, watching this show, if you like our content, please hit the subscribe button so that we can continue to bring you such meaningful content. Thanks for watching. And Sandeep, thank you for being on the Money Mindset.
Thank you, Sonia. Thank you for inviting me to the show. It's my pleasure to be on the show.
And it was your first ever podcast, right?
Yeah, you can say that. Yes.
Okay, so you can be comfortable. It's like a very casual chat. So over the next 1 hour, I'm going to pick your brains about the tech sector, because I know that this is a space that you've tracked for very, very long, Sandeep. And there's so much happening here, right? First, let's start with what the landscape is looking like, because TCS just, is looking to lay off 2% of their global workforce.
Right.
It may not seem like a lot, but it is kind of a defining moment in what's happening in the IT sector.
Yeah. So, Sonia, it is a very, very hot topic right now. Everyone is worried about what is happening, and there are two different views on the street. Some people say we have seen a lot of tech transitions in the past, which is a fact, and India has always overcome. And there is another view that this time is different, and you must have heard that phrase also many times in the past, right? That this time is different. So I really say this, that I'm a technology passion. I'm a technologist myself. I am very passionate about it. I have done a lot of work on technology, not only track the sector, and I believe that I have been a perennial bull on this sector. And many times in the past, you would not find a single negative report probably from me last so many years. But this time I have a little different perspective. I am not very negative, but I will tell you the perspective is different, because in the past, always what has happened was a transition, right? So you are transitioning from one technology to another, which means that the existing workforce which you have needs retraining, reskilling, which will take 4, 5, 6 quarters. And during that time, you will have a lower revenue growth and lower margins, because you have to spend on training. You will not be able to bill the client in the same way. You have to call people on weekends for training. You have to spend on the reimbursement. So there is a impact, a temporary impact of 4 to 6 quarters. It has happened in all takes transition in the past 30 years, you name it, and it has happened that way. And that's the reason I was always a bull, because I knew that this is not going to change anything. It will come back and you are getting something at 50% discount. So go buy and buy. This time, the only difference in this transition is that, if you see any transition in the past, never ever efforts have been hit, right? So efforts have only transitioned from one technology to another technology. Overall spend has gone up, which may be the case now also. But there are two differences. One, in the past, where the overall technology spend, if you see, hardware have always fallen in prices. So hardware component has not gone up much. The services and software has always gone up. During transition also, the efforts have actually moved from one space to another, the new technology, and because of that, spend has gone up. This is the first time when efforts are going down, because Gen AI and you building agents to do it, the prompts and everything which you hear about, they're cutting down efforts left, right, and center, and that is the reason why the all the global tech and the Indian tech all are talking about cutting the workforce, because that is the real solution. And if you see the data in more detail, for example, TCS or anyone, the revenue per employee has actually gone up in last 3 4 years, because they have not hired as in the same rate at which the revenue has grown, because they are trying to do right sizing. So what you are hearing is something which has come out after 3 4 years of effort to right size. So they know everything that this is going to come, and they have tried to right size. They have tried to shift people up, down, adjust whatever was required, and now they are finding there are some people which they can't adjust anymore, and they have to just change that workforce, because the workforce which is doing the work is at the bottom of the pyramid, and the middle of the pyramid, actually, to speak in gym language, the tummy has become little fat. So you have to just reduce your food, and also you have to go to the gym, and that is what TCS or any other tech company is doing.
So, the big question is, if TCS is removing a lot of the senior and middle management level employees, then they are pretty much trimming the fat, right? Is the reason that people are not upskilling themselves, or is there some other reason? And what do you see as a way forward?
So what has happened, Sonia, if you see technologically, is that trimming has become mandatory, because the work which is coming, it's so much helped by the AI thing that you cannot actually do that job with that expensive resource. So it has become like, I will tell you, in my opinion, next 3 4 years you will see a lot of grad hiring, tier 2, tier 3, lot of hiring will happen, because the prompts and everything will help, and you can do that work at a much lower price, right? So I don't see challenge there in the bottom of the pyramid. You will still keep hiring people less than 3 years. They will be required, they will work and all those things. Problem is that this middle and senior, because what AI has done. So if you in technology parlance, uh, there is system, right? The computer or any system, and then there is code, low level language which the hardware understand. Then there is high level language which human understand. So AI has directly jumped that journey from machine language to human language. So the middle layer, which was there, which was in this middle management doing everything, right? Compiler and assembler, everything, that all is actually gone away. But AI has directly jumped from machine language to natural language. That journey has been shortened so much. So you don't need the people who are expensive people or who are in the middle layer or say. So I'm not saying they have not upskilled themselves. They may have skilled, but you don't need them anymore, because that job has been replaced. Exactly, their job has been replaced by AI. It is not the job at the bottom which has been replaced by AI.
Wow, this is a very interesting insight. So you're saying in the next 3 to 4 years, as AI, advances, there'll be a lot of graduate hirings at lower levels. So then what happens to the middle level, the 35 to say 45 range, category where people are in this, they generally reach the middle or senior level management. What happens to them?
So, as I said, lot of adjustments have already happened in my view. So, what you are hearing is the last late, probably when you come out publicly and say that I have to lay off 2% of people, and mostly middle and senior. So, a lot of adjustments would have happened. Also, reskilling these people just to retain, I don't think it will serve any purpose, because what has happened, the pyramid has become very thin on the top. So, basically, you will need people. I don't think we can upskill them at 40s or 35 so easily, because you need now people at the very, very above level, top level, like, LLMs level, it is so tough. And then the even very cheap level. And you need people at the bottom level. And the middle level is what AI has taken away. So the solution to this is right sizing. You have to find some other jobs or something for the middle and senior. I don't see really a solution to that problem, but I can tell you lower level there is no problem. And also I will tell you that this problem is reflecting after all the problem or whatever they could have done is done. So I think now after TCS, many companies will come and they will do this 2, 3, 4%, whatever right sizing they have to do. And then only, things will get reset. Without that, tough.
So, Sandeep, it's very interesting to me. You have tracked this sector for last 25 years, right? And now you've done a lot of work in AI as well. You helped set up the first AI platform. Um, if you had to advise the new generation who is in the technology sector, how do you think one should upskill or stay relevant?
So there are, multiple things like we need to, for example, you must have heard AGI is coming now. So people will have to upskill themselves, and this young generations can do that. See, I believe that many people in India think that we don't have those technology to upskill, those opportunity to upskill. It is not like that. Today, everyone is talking about Nvidia's success. Go back 4 years and see their numbers. No one was talking about them because they did not. GPUs were not in demand. Today, GPUs are in demand because for AI, you need parallel processing, which was not required earlier. So GPU has become suddenly relevant, and it is not that by the way, Nvidia has spent a lot of money in R&D as a percentage, yes, but their spends are very minuscule in comparison to Microsoft and others. But today they have become the biggest customer of Nvidia, and Nvidia is killing 60% margin and not 92% market share last quarter, whatnot. So things change very fast and you have to learn, and we have all the facilities in India. I honestly don't believe that we don't have those facilities to train people or educate people, impart those. Our people are only working in all these countries, all the companies at every level. So I think we can do that. Our IITs are really, really good. They are running incubation centers. Dr. Anand Deshpande of Persistent used to run incubation center even in 2008 when there was my IT company in Pune on the IT park. So they are people who have done great work, honestly. And I believe this we can our coming generation can definitely train themselves. And I can tell you we are very agile economy, very agile people. The IITs will soon have all those modules and everything to train. So I'm very, very positive, and I think next generations will not have problems. See, this is a backward looking problem. So you have come and hit something which was in that middle side. AI has taken, as I said, it directly jumped the chain from machine language to the natural language. So you have made middle side completely irrelevant.
So when you say jump the chain from machine language to natural language, can you tell me more? What do you mean?
So basically, see, what the machine understand is binary 0, 1, right? And then there is a code language. Then you move to assembly language where you have syntax. So basically, science, right? MOV or those kind of commands. Then you have command language, and then you have coding language, which is C++, all Java, Python, everything. And then that language you can type, and also that is called high level language, which you understand as a user. What has happened is that directly from that code language, we have every place where every shift from code to assembly to line to command, there were people who were required. Now what has happened, this is automatically coding. That is what AI is coding now 30% of the codes. So this is directly coding. So from machine, you're directly going to natural. So all the jobs in between, they have been hit very hard. So it is basically algorithms are doing everything which humans are doing. Let me put it that way. So the hit is in the middle. So solution has to be in the middle. You can't solve entry level recruitment to solve this problem. It can't happen.
Correct. So in terms of job creation, right, over the next 3 to 5 years, how do you see more jobs being created? Because that is the big problem that India is facing given its demographic dividend. What kind of jobs do you think will be created with the advent of AI, and how do you see things play out?
So I would say that the fresher intake, which is right now a little lull, and it is little down because, as I said, these companies have come at the end of the problem to tell because they wanted to solve things to the best of their abilities, and they have done that. Now I think after some time, maybe 3-4 quarters, we will again see pickup in hiring. And if you see, there are a lot of negative news, but also if you see Infosys there announced that they will still hire a good number of people and all. So I think that fresher hiring will come back very strongly. I don't see a challenge there. Maybe 6 months, 12 months later. I'm not talking about 2, 3, 4 quarters, but I'm very confident in a year's time, fresher hiring will come back very strongly. I don't see challenge there. But now fresher hiring and then the middle and senior level, there will be still some exits which will keep on get. It will be voluntary and involuntary attrition, both of which will happen. So the net addition number you may not see very big, to be honest. But intakes will be good. Middle and senior level will be adjusted. What is left is asked to leave or whatever, involuntary, voluntary. And so net addition numbers will not be very exciting for next 2 years in my view.
And you were showing me the chart where TCS's revenue per employee has actually gone up in the last few quarters.
Yes.
So do you think in terms of like, I'm now looking at it from an investment lens, right? A lot of us have invested in IT companies over the last 10, 15 years and made sizable money. Right? But now the terrain is changing a bit. So from an investor standpoint, do you think IT stocks still make good investments, or do you think it will just be, a dividend play?
So very interesting question. So I will tell you the mature part of it. So for example, if you see 224 is our IT exports now out of 283 billion, which we total IT services revenue of India. So the outsourcing space, right? And there is BPM clubbed in it. But if you remove the BPM from the denominator and numerator, then you will see that we are broadly, almost like 85-90% in terms of penetration in the outsourcing space. So you can't penetrate anymore. So it is only dependent on the incremental spend which is going to come. What is happening right now? The incremental spends are going to the hardware, as I said, because Microsoft around buy 20 billion chip from Nvidia alone a year. So there is a volume, and there is only one chip, Hopper chips. So all of them are buying different chips. All this Five Guys, Oracle, Amazon, all this together buy more than $100 billion from Nvidia. So the hardware spends are going up after a long time, and software spends are not that much. So I think from that perspective, for us to grow in double digit for the large names will be tough. Large names can grow between 3, 4, 5% for next 2 years. That is what my sense is. And but this time, all the tech transition in the past, the first turnaround always used to happen from the top, right? The large cap, we were the first to turn around. This is the first time in tech transition, people who have right size or who have the lowest net addition last 3, 4 years, they will be the first to recover. So this time the ship will be from the small will do the best, mid and then large, because they will be it will be easiest for them to cut down the middle part or the fat part of it.
Interesting. So you said hardware spends are going up, software spends continue to be low.
Correct.
So investing in IT companies at this juncture may not be the best thing to do, given that you don't expect outsized returns from these.
Large cap, it will take time, but small and mid cap, you have to go by data, and there is a lot of data. I run a PMS. I can't give you name of stocks, but there's a lot of money to be made in small and mid cap also. So you have to just find where the sizing is right, where the net addition is not too much, and it is broadly same and all. That is the place, because they have done good right sizing, and it will be very easy for them to, cut down that middle part and do well.
So the dream run in the large cap IT stocks is done, you think?
For the time being, yes. You will not see big dream run. I'm not talking about stock run, but the revenue and growth and those will be little muted. But because, for example, TCS last 5 years return, CAGR return in the stock is 5-6%. Infosys will be 8-9%. HCL Tech will be 10-11-12%. And despite COVID, bundling up and giving all the spends.
Correct.
So returns are limited. Going forward, next 2 years could be limited. But because the stocks have gone through time correction and price correction, at some point of time, investors will want to have dividend yield stocks for safety, quasi cash, whatnot. So those things can happen. Also, now interesting, when I speak to so many fund managers and investors, I come to know that, some of them started treating IT as a FMCG an alternate, because they say that for similar 5-6% growth, rather than paying 40 multiple, we will be happy to pay 20 multiple to IT. So this can be our new defensive or quasi cash in the portfolio versus FMCG. So because of those things, they may not fall much. Let me put it that way.
Okay, so IT is now moved to becoming the defensive play. Wow, that's interesting. You were telling me earlier, Sandeep, that it took only 4 years for Nvidia to see a massive jump in revenues, right? So 3-4 years is good enough time for a company to turn around in a big way.
Absolutely.
Do you think that companies like TCS and Infosys, that for the longest time, people were complaining that they're not investing enough in R&D, they're not investing enough in product, they're just remain a services play for the longest time. So there's no innovation. Do you think that turnaround can happen over the next 2 to 3 years?
So see, a very interesting question, and data supports that. So if you see 2021, Nvidia's revenue were lower than TCS, right? And but their R&D spends were much higher at 4-5 billion, and TCS was spending around 27-2800 crore, which is less than half a billion, and that a lot of money was going in innovation centers. So I think, but from there, Nvidia suddenly, because their product has become successful. So we cannot absolutely compare because we're in different businesses. In product business, it is a hit or miss. It is like drug approval. Something they did well because GPU picked up. So they are there where they are, and they are making absolute crash on the margins, like, 60% margin they are making. How can you make that kind of margin on product for a longer time? AMD will someday come and, definitely give them a tough time. Margins will come down in this sector also. But I would say that, like we spoke about AGI, which is people are all working together towards that and all. I think TTS and all, they have enough cash, and the R&D money which is required is not that big. You can see all the data I have shared with you also. Like, Nvidia spends was spending for $5 billion. Others were spending. The only challenge is we have to take that call that, we pause the distribution of dividend or the buyback for some time. And I'm not saying you start making chip or moving towards products. You can't change that business model because it is the best business model you can execute at scale. And if everyone starts doing the same thing, who will do the services? Yeah. So it is our strength and our domain. But we can definitely, invest some money to create those tools, something where efficiency could be improved substantially. And then, we can move up the value chain. We can collaborate with all these NVIDIAs and everyone, and we can put more people to them, which increases your price realization and all.
But why are they not doing it already? Why are companies like TCS and Infosys not making that spends on, product and innovation? I mean, this is a discussion we've had for the last 5 years, right? That the company should pause on their dividends and their buybacks and channelize that money into R&D. Why is it still not happening?
So being a sell side analyst, I must confess that people like us and investors don't allow them to do, because if their profits fall, we don't take R&D spend as spend. We say that is a lesser profit. We don't see it as an investment. So investors put a lot of pressure to these companies, and one of the reason is investors, because in India, most of these companies we talked about, they're very investor friendly and they don't ignore what they say. And the sales side analyst starts questioning. I can tell you that even a small spend they've done. There was a very celebrated CEO who has come. There are a lot of news about him also. I've interacted with him a lot, right? When he came to Infosys, I have upgraded my call on the company from hold to buy and all. And I was very excited, and he was doing phenomenal job. But he put some money out, and you have to write off an R&D. You see, for example, Sangeet.
He was the only one who put money in AI or thought of putting. You're talking about Vishal Sikar.
Yeah. So, he was trying something. So I'm not saying that right, wrong, I don't know. But he was trying something. Similarly, you see Sanjeev, right, of InfoEdge. They have to take write-offs. Every year they have to write off some of their investments, right? It is not in R&D, you have to spend and you have to write off also. That mental mindset is not there today. Everyone is saying why Indian promoters are distributing money and all. They stop distributing for 2 quarters. I'm telling you, so many people will sell the stock. They will say, oh, we were buying for dividend growth to any which ways. So why should we keep this stock? So I think it is like that. They have to balance double-edged sword, and I honestly think that these are very capable management, the large names, very good people. You see CVK's speech when he came, took over the reins of HCL, he was so clear that I want to invest in R&D and all. But when growth slows down and your profit start going down, then there is a lot of pressure that don't spend now on R&D because already we are under trouble and all. And those things,
well, and interesting, actually, that's a larger discussion, as you said, on the mental mindset, right? Is it that Indians, just by way of upbringing, have a lower risk taking and lower threshold for failure? Because when you do R&D spends, as you said, right, it's hit and miss, it's hit or miss, right? But if you look at the West, they have such a high propensity to take risks. For them, every entrepreneur is taking risks, whether it's even like Microsoft spending $30 billion per quarter on capex. I mean, you wouldn't see that kind of risk-taking ability for companies in India. So is it like a mindset problem, which is something that may just not go away so easily?
Mindset problem is also there, and the size of economy is also there. I will give you 2 data points. Amazon started in 97, more or less. 2015 was the first time they made $1 of earnings. they lost money for 18 years, right? And still market cap was good, let me tell you. In fact, market cap has went up 1,000, 2,000 times and they are making loss. Once they started making profit from, in 2015, they were making $1 profit. 2023, I think they made $80 or $70. The stock had moved up 7, 8 times. So earnings have gone up by 70, 80 times. Stock has moved up by 8, 10 times. Before that, when they were losing money, the stocks have already went up to 3,000 times. So that is the far-sightedness of the investor there. And the reason is our cost of equity is high. Their cost of equity is low. Also, one very interesting data I will share with you, Sonia. Whenever, these companies, whenever they had come, you go and check whether it is Meta, whether it is Alphabet, anything. Before that, 10 to 12 years back, you will find a period when the interest rate in US has become zero. So the risk taking ability or the investors want to go for assets which can give them some return. Because if debt is at zero or the rate of interest is zero, so they want to invest very. So these are the times when these all startups get funded in a big way, right? And then after 10, 12 years, some of them will become unicorns, they will become successful and all. We have never gone through that cycle of zero rate and all. I'm not justifying not becoming we don't have much yield now, but we have a high cost of equity. We don't have those kind of resources monetary wise. And whatever we have, I think we have done an incredible job. There is a Zomato, which has done wonderful. Info Edge is doing wonderful. There are so many companies. Paytm is doing good. And I'm a very optimist on this. I believe we have done much more than versus the resources which were available. Yes, if the question is that the amount of money which has been distributed in terms of dividend and buyback, it was almost like 1 lakh crore in last few years. Again, that the R&D spends are very minuscule. I agree absolutely to that.
But all the companies you mentioned, interesting, right? You mentioned Zomato, you mentioned Paytm, InfoEdge, all service-related companies, right? Building a product company is something that India has been unable to achieve, unable to crack. And with such a large population, one would hope or pray that at some point a large product company hasn't been built. You think it's just a matter of time?
Yeah, absolutely. Because that is the way it has evolved. You see in US also, if you see first what has come, the HPs and the Dell, all services company today, they have become almost like, no one wants to buy those stocks and all. But Indian IT services has gained all the market shares from HPs and all those companies, Dell services and all. So now no one talks about them. So, it is evolution and they were also surviving on services. And then, products were obviously there, but they never made big money on product, always made money on the services side. We are also evolving. I believe that we are doing a lot on the technology side. We need some mindset change as Prime Minister Tape that, we have to take AI as an opportunity to trade everything. And he is very clear when he says that, you have to spend on technology, focus on technology. And I think people are listening, people are doing. I would not say that I am not in that camp which believes that we are not doing enough. We are doing a lot. We have our constraints. We are not 30 trillion economy. We have limited money, and within that limited money, we are doing wonders, in my view. And you will see a lot of product companies also coming. Product companies generally come at the end. They can't come at this size of economy, at this per capita income and all. And I will tell you, there are more than 5,000 companies today. I have seen so many startups. I myself was a startup. In technology, the challenge is that if you're before time, you will become bankrupt. Like the way it happened with me, 2008, I'm doing AI, machine learning. People were laughing at me. There was no taker except probably Anand Chandra. Few people were there who used to understand that this can become big in the future. But most of the people, including my family members, used to, scold me so many times that you are doing something which no one understands.
In 2008, you would do AI. Wow.
So
That's interesting.
I have coded myself so much things I have done. I still do a lot of stuff, but the problem is time is such a constraint. I will code for 4 or 5 hours, then I forget for 10 days, and then I again have to come back and I think what I was making. So it is like that. And, I believe he will do great. And a lot of product companies will come. After 5 years, you will see and you will tell me that, you are right. There are a lot of product companies will come. I'm not talking whether we will be able to make chips and all because it is a long gestation period. But we will definitely make a lot of products similar to what Microsoft and Alphabet are doing. I'm very confident of that.
Really? You think so?
Yeah.
So at this point in time, what do you think is needed for India to unlock that move from services to product?
So I think government has done a wonderful job on the PLI side, and it has really the seeds are sown, and value addition is happening. I think government should also do something like saying that okay, we will reimburse your R&D expense. You have to spend 5% or 2% or 3% of your profits or revenues, whatever it is in R&D, and we will reimburse similar amount in form of tax concession or something. So government should only incentivize on R&D and not on just setting up the thing, because if you incentivize R&D, then you will have permanent solution to this innovation product and everything. Right now what is happening is it is a kind of subsidization which is required. Obviously government is doing the right thing, but in technology you will have to subsidize or incentivize the R&D. If you do that, I think you will have wonders. And I will tell you, you go to IIT Madras and they are doing wonderful job. You give some support in form of that if you need only R&D as outcome, you make that a mandate, it will happen.
Okay, government to incentivize R&D. And that's a great point, because that'll at least, remove the pressure of the R&D spends going to waste and then hitting profitability. So perhaps that is a good point to note. Okay. So then in the next 15 years, right, what will happen in the world of technology? You were talking about the advent of AGI. Tell us a little bit about that. How far are we from AGI? First of all, for people who don't know, what is AGI? How much time do you think it could take for AGI to come through? And then what happens to all of our jobs?
So right now, if you see what we are talking about is GenAI, artificial intelligence, and all these are there for last 20 years. If I can do it in 2008, I know people would have done in 98 also. So I think what has happened, what is the difference today between AGI and AI? What we are doing is that AI and all that, as I said, they're jumping from machine language to the natural language. In middle, you're cutting down everyone. AGI is that it will jump in everything from 1 to 10. So then it will not be only about technology. It will be in everything you do, healthcare, research, anything you can think of, there will jump. So today what is happening is you are asking some computer to do something, and it is doing based on the data which is available in the web or in your server or something, and he's giving you a solution to that. AGI will probably solve everything, right, from logistics to innovations to pharma, everything. So it will encompass everything. And that's the reason I'm so positive about India. Because I know that when it is only technology, then probably, the US and others will have an advantage on it. But when it comes to the other general, where you get such a big testing lab, because this product has to be tested. For example, there are very, very good doctors in India. And why they're so good? Because they get so many patients to test on them. So they are the best when best surgeons are in India. I have an experience also on that. So similarly, when it comes to AGI, I think we will have a substantial edge, because the sample to do those testing, back testing, we have immense amount of those samples. It may not be that easy when it becomes non-tech in the developed market. So I believe that AGI will be more about non-tech, the way I see it, rather than only tech.
Okay. So when you say non-tech, can you just elaborate?
So basically, it will be across the sectors, like from logistics, from healthcare, from innovations, from R&D, from teaching, from learning, from everywhere you will use. It will be a complete platform which will have under its gambit not only the text or the graphic, but the exhibition models and everything. So you will cut down the, like what you see in PERT CPM kind of models, where you find the shortest path. So they will find the shortest path in every aspect of life. So it will be more, and for that you need a lot of sample, right, of every work you are doing. And that is the way I think that, it will completely game changer, and it will be a much bigger revolution. I think AI, Gen AI, what you are saying is the first page of the book. AGI is the whole book.
Wow. That's also a scary thought, right? Because people, I mean, I don't know, it's like it's hard for people to accept and then evolve and then upscale, and especially this generation of 30s and 40s, which has seen such a rapid transformation in technology.
So human minds are, like that. They learn very fast. I'm telling you, uh, I have very good experience with the youngsters who work in my office. I see them; they are learning so fast. They in my office, every other guy builds agent whole day. I tell them we have other work also to do. Why you're building whole day again? I have guys who write only prompts, and they are now trying to write prompts to find what stock will do well in next 7, 10 days. I said we are not in trader. Let's not do it. So young generation is very fast to learn, and I'm telling you, the courses will be evolved. I'm very confident that IITs are working on a lot of modules and everything. So the courses will evolve in a big way, and people will. You will see a difference there, like
So the education that you're giving our children right now is going to hold for nothing in the next 10 years.
I won't say, because as I said, the entry level is basically not going to get disrupted much, because basic education is required. How will you run the prompts? How will you run the agents today? Also, you need basic. You need to ask the query at least, right? Yeah, but like in Google now, voice has come. You just speak and it finds. It can happen.
Wow. Interesting. I mean, even like all professions, right? I mean, in my profession also, I see AI has evolved in a big way. Now people are creating videos on AI. You don't even need to be there for, you just have to give a prompt and the video is set up. So it actually improves your efficiency. It improves your delivery time. So in my profession, at least, I'm seeing that. What about in the way investors should look at both investments, as because you run a PMS, right? Both in terms of investments and in terms of allocating money, in terms of which are the assets that will do well. What's your view on how the next 3-4 years may shape up?
So I will again give you a practical example of what we are doing. So we have obviously Perplexity is the aggregator where you get all the four.
Yeah.
But we have individual license of all of them because there is some difference in the versions which you get in Perplexity and there. So you may save some money. And now we are also thinking to move up and buy the meta versions of each of them, which will be even more expensive. But what it helps us is that I have cut down my traditional research effort by 70% with only paying the basic version. So I'm just imagining when I go for the higher version, I will probably cut down another 10-20%. But what we have done smartly is that we have reallocated those resources to do a little higher end research where where there's softer issues like manpower, board, all those things, which we were earlier not able to do because we have to do the number crunching and all that. So all that part is now taken care of through the prompts which we are running. So prompts are doing most of the work for us. You have to refine the prompts. Sometimes they give terrible data, to be honest. So you have to refine the prompt consistently. You have to write the agent. You have to do some work. But it has given me a lot of more time to focus on my core, which is research, and it improves the quality of research. That is number one. You can do a lot of things like when for last 10 times the management has come, what they have said, whether they have delivered, not delivered, their face language, everything you can do by writing the agents. So we are doing that, and that is one way to look at it. And I think the in every space it will catch up. It will help you to focus more on what you want to focus. So the investment journeys will become much more easier in my view.
Have most of these large institutions also sort of advanced to using AI and AI tools in their investment?
I think so because the good, as I said, it is a direct jump from machine learning to natural language. So you don't need to know anything. It is like Google window. You type
Yeah.
prompt is like half an hour training to write prompts.
Then why does anyone need fund managers for? I know that's a very
So some things, as I said, we are not still in the stage of AGI. Number one. Number two, there are some constraints because, as I said, the data which comes are sometimes terrible as well. And on the top of that, there's a feeling that when you see the management, when you meet them, when you see the factory, which this thing can't be done to these agents and all. You have to still visit the factories. You have to go. You have to when you go there, interact with people, the shop floor level, and all those things can be automated and all that will remain. And I think that is where investments actually decisions happen. You need these are hygiene factors. So I'm saying hygiene factors, your efforts can come down substantially, which gives you more time to visit factories. Like today, if you are visiting a factory once a year, and you can visit 4 times a year because your bandwidth will be released to that extent.
Yeah, but it's just a matter of time, I guess, where a lot of more things will get automated, and then the human element, it'll leave you more time to do the human element, which is visit more managements, etc. And since your research time is getting cut down quite a bit. Okay, interesting. So where are we at, Sandeep, as far as the market is concerned? I'm asking you because now, there's so much happening. First of all, there's the advent of AI, AGI, Gen AI, etc. And then you have this whole element of increased tariffs as well. We've seen what Donald Trump has been speaking about in the last few days. Although I don't know how many people actually trust his word anymore. But still, where do you see India, in the global context now?
So I can tell you this, and I've dealt with a lot of clients in the developed market when I was having my own tech company, and later on I serviced a lot of them in my earlier tech ventures and all. I think they really appreciate the amount of hard work and the kind of work we do and the knowledge and talent we have, right? There is only Sonia, maybe less than 1% population and 1% workforce which actually works on something which we may not all of us can work because that is very high end and all that, because they put tons of money and they are little caged because they have IPR and all those things. But otherwise, we are far ahead on all the other 99% of the things in the software side. that 1% also we are getting in there, because now the global CEOs are mostly Indians, you can make out of the tech companies. And I think that journey is very fast and it is uplifting. But so I will say that our dominance in the global tech industry as a software service provider and the software factory of the world, I don't see it going away anywhere. It will be there. There is a pause. There is a 1 or 2 year of pause when we have to right size, right fit, cut down some of our workforce. We have to take some tough decisions, reallocate some money. And I think in a way, whatever happens, happens for good. Now, when we are discussing this and people are asking this, why you're not spending R&D now, management will also have more comfort. I'm not saying they have not done it, but they will also be, willing to take more tougher bets and bold bets. And it is just a matter of taking bet. As I said, I see all the numbers. I'm tracking the N7 for like now 17, 18 years. Since beginning, I've seen them doing nothing basic stuff. And today, where they are. So I believe that we are much better placed than what they were 15, 17 years back. So we may be, 15 years behind. And because of everything jumping, their journey could be cut down to 3, 4, 5 years. I'm again not saying that we'll have $2 trillion companies and all that like Microsoft and Apple. Their scale is different. Investments are different. Money is different. Colleges are different. Everything is different. We are building that ecosystem at a much lower price, and we will be able to do it.
So when you say that, Indian IT companies' dominance in services will continue, there's one argument to that, which is the advent of GCCs, right? So this is when companies like JP Morgan, Goldman Sachs, etc., set up their own small services unit in India, and the pickup in GCCs has been rapid in the last 3 to 4 years. You think that could be a threat to Indian IT company?
So the right way to look at it is that GCC's proportion versus total. I don't think there is a big jump in that proportion as a percentage. In absolute numbers, you are right. It is very big. It is 52 billion or something in terms of and all. That number is big, but as a percentage, it is not gone up disproportionately, which means that they face the same challenge we face. They also, for them, it is difficult actually. We know everything. We have relationship with the colleges. We send offer letters in third year training. Our modules are working. Everything is happening. They don't have so much of advantage. They have some. Plus, from the college, their Infosys picks 100 people or 50 people, they pick 5 or 7 people, right? So, all those things are also there. Uh, and it is a backup plan, to be honest. I've worked for a lot of, means I've consulted, been done. I'm telling you, they are not there to take away that 20% margin. For that, they are not putting it. That is a backup plan, because, sometimes you always need to have a backup. So, GCCs are actually the backup plan for the same companies which have given much bigger outsourcing to the Infosys and TCS and Accenture. It is not that they are not giving completely, it is their own. It is not like that.
But eventually, you don't see GCC as a percentage going up. And, for every employee that Infosys loses, perhaps it could be a gain for GCCs, right? Is it the right way to look at it?
No, I don't think they are not into that game, only because it is not going to yield anything. As I said, it is very small in their overall balance sheet, global balance sheets and all. They're just keeping backup. Sometimes some things can happen. We have seen, Satyam and other things happening. So people want to keep backup, and these things are for backup. I can tell you with a lot of confidence, I don't see there is any plan or merit for GCCs to, cut down the workforce or take the work from the Infosys and TCS and HCL Tech. They are doing much better and much different kind of job. GCCs are doing more, either very IPR related work which they don't want to share with anyone, or very operational things. They are not doing, their work don't overlap much with these people, honestly.
Okay. So, coming back to where we started, right? IT companies and what's been happening over the last couple of years. And we've also been witness to it. On one hand, of course, there is lower spends in R&D. On the other hand, there's a huge difference between what the TCS top management makes versus what the entry level employee makes. Entry level salaries have gone nowhere for last 10 years, and top management is earning in 20 and 30 crores. So if you had to kind of, hypothetically advise some of these IT companies on how to change this whole game for themselves, what would your advice be?
So, again, it is a little complicated, I will tell you, because you are absolutely right. The entry level in 2008 was 3.25 lakhs, or today it is 3.754. In IITs and all, it has gone up substantially. But first of all, the person who has got 3.25 lakh in 2008 today is getting 30-40 lakh. So same person is not actually getting less money, right? He has evolved, and he has actually become now the middle management or senior management, right?
That is being laid off.
Well, now it is being laid off. So they have made good money on an average. I would only say that, in real terms, the value of 3.75 lakh today versus 3.25 lakh in 2008 minus 60 70%, which is very low. That should definitely go up because it will encourage people to do much more better, skilling and all that. It is a natural money. People need money, right? They have expenses a lot.
But why do you think that's not happening? I mean, TCS has received this feedback maybe for the last 5, 6, 7, 8 years, but still there is no real change that's taken place. Right? So not just TCS, I'm talking about all of the large companies.
So what has happened? The platforms have become very advanced. So I will give you, and I am a coder, so I can share this with you with full confidence that this is what is happening. So earlier the work which 5 people were doing, you needed one project manager. Let's say on the platforms have become so friendly, libraries have become so friendly. You get everything. So now you can, as a project manager, manage 50 people, right? So your costs are, and those people, when you needed, like, let's say 15 years back, an IIT to do that code, today a grad can also do that. From even without non-technology background, non-software, you can train him and he can do. So basically there, the salaries are actually lower in the market. And that's the reason they are giving lower salaries. That's the reason I mentioned that IIT it has gone up disproportionately. So wherever it is apple to apple, salaries have gone up disproportionately. There is no second thought about it. But because the work itself has become so easier, the amount of knowledge you need, the talent you need, it has gone down to those levels where the salaries are not high. So you're getting people at that. I'm not justifying the lower salaries. I think it should go up a little bit. Definitely, it should go up. The problem is also that if this salaries goes up, then the margins which they are able to hold in this turbulent time since last 3-4 years after COVID spent, I think that margin will go down by 3-4%, and I think that is the worry which everyone has. But I think now with this middle management now being involuntary attrition happening and all, I think there will be some leeway to pass that on.
But what about the top management? I mean, they're all like making 20-30 crores per annum.
Very small number of people do that. I will tell you, because if you see the annual report, nowadays it is mandatory to report have a 1 crore and all. Last number which I saw, because I used to analyze all this, there were 300 odd in TCS, 200 something in Infosys. So it is small number which is making even more than 1 crore. Above 5-7 crore, it is very, very small number, maybe 10, 15, 20. And then there are taxes, there are cost of living, there's travel and so many things. So, and then, if you want to cut that and all, then those talents are actually really, really very, very expensive abroad. So you will have to pay 10, 20 times to get the same talent. And we have seen that in Wipro when they got CEO from France and all. We have seen those salary differentials are big. So I don't agree to that argument that, the CEOs are making big money. I think they are really, really rationally paid. They deserve that money because their counterparts in Accenture somewhere else are making much more money, to be honest.
Okay, so in the last 1 hour, we have talked a lot about many things, and Sandip, it was very, very educational for me. So thank you so much. बट ब्रेक के पहले आप बता रहे थे कि ये जो फैंग स्टॉक्स हैं जो इंटरनेशनल इन्वेस्टिंग है उसके बारे में दैट्स अ ग्रेट अपॉर्चुनिटी फॉर से फॉर द नेक्स्ट 3 to 4 years. But one would have thought that the rally that we've seen in FANG stocks has maybe peaked, but you don't think so?
So, I will speak about M7 and FANG. A lot of them are same, but NVIDIA got added and all. So I think the way technology is moving, and there is today no direct challenge to that. So, Alibaba has everything which they are doing, but for Alibaba, it is too many things they are doing. So I think till the challenger comes, or that someone comes to disrupt that, as I said, it will be tough to disrupt them. Having said so, within these tech companies also have their own boundaries. For example, if you recall, 3-4 years back, they have changed the settings for Meta, right? And when that happened, the stock collapsed because the ad revenues went down and the stock fell and all. So they found out their way and it came back and all. So these companies have invested, as you rightly said, and you can see all the data and information. They have invested a lot of money in R&D. On an average, all these companies are between 10 to 15%. Some of them are at 20%. Meta is at 25% in R&D. Now that kind of money, when you push in R&D, then you find solutions and you are able to develop things for the future. When you're developing things for the future, you're making a lot of things out of which few will click, and they give you a CAGR of 15-18%, and that is the number you can see that it is there for all these companies. So I will say in a portfolio manager's language that you buy some stock which will give you 40%, some will give you 10, So on an average, you will get 20-25%. Same thing has happened in all the stocks, and they have done wonderful, honestly, at that size and scale. They have been able to achieve that 16-17% revenue growth. And even the market cap is more or less similar. Growth and market cap has been similar. So investors have been same every year, to be precise.
But in investors who don't have exposure to these companies yet, right? I mean, for example, I have exposure through some funds that have invested in global stocks, but directly as well. What's your recommendation? Is it still a good time to invest in FANG or the Mag 7 companies globally? And if yes, what's the best way to do it?
So I think we have a upper limit of 2.5 lakh dollar per year, so which you can do directly, or you can invest through some of the offshore funds. There are a lot of offshore funds which names are in the public domain which have done well. Some of them really understand these stocks. Some of them take help from the global brokers and all. Uh, one or two guy, when I was covering this space, whom I used to service, they really understand well. So one of the guys I will not name, but from a large fund, young guy, he has taken a big bet on Alphabet. I used to service him regularly. Alphabet was not doing well at that time, but then you see after that they have done phenomenally well. Some people have taken big bet in Meta when it fell sharply, and they have done well. So I think these stocks can give you pain in terms of time correction, price correction, because they're very volatile. Remember, technology disruptions happen very fast. You can lose 40% quickly. But if you take a longer view in the management and you believe that they have the balance sheet to invest and reinvent themselves, they are good to invest.
So as per this chart, right, if you look at Microsoft and Alphabet, the 10-year CAGR has been about 11 and 18%. But if you look at Nvidia, the 10-year CAGR is about 40%, of course, on a lower base, right? Meta's 10-year CAGR compounded growth is almost 30%. Amazon is at 22%. Tesla, of course, very low base, but 42%. So on an average, if you see between 20 and 30% is a 10-year CAGR for these companies. Do you think this is something that one can expect even over the next 10 years?
It will be tough to say that history will repeat, but I will say that the last 3 years CAGR returns are more indicative of what can happen for next 2-3 years. And I think 12 to 15% CAGR, I don't see a challenge, because they are in most of the products in monopoly. They are not overlapping much within their spaces. They have some offerings which are overlapping, but they all have found their own niche and they have gone very deep inside that. They've invested a lot of money. So, that is a good thing about it. So I think 10 to 15% CAGR, it will vary what cycle you see, is very much possible, and at that size it is good, and because there is a lot of operating leverage. So you will see better. So if you see these numbers, the PAT growths are better than the revenue growth. So the operating leverage in technology is higher. So I would say the PAT growth will be even maybe 3-4% higher. So that makes a lot of money.
Okay. It was very informative, Sandeep. Really, I think we can go on and on, but we've come to the end of our discussion. But before, I let you go, I also know that you have 2 young daughters, and we were talking about that, how technologically advanced children are these days. How are you investing for your children? And in this evolving, rapidly evolving world, what's the best way to invest for the future generation?
So we are doing two kind of investment. One, obviously, in the education side of it. So we are investing a lot of money in education. So my elder daughter is so fond of studies. I can tell you, means you get her a book, and she only gets she wants in her life is books. Crossword. She buys books, reads, and makes a summary and tells her. So she a voracious reader. Younger one is little naughtier, but she does wonderful things on technology. She plays with my phone and finds out some or other things. She copies voice, fingerprint, whatnot. She calls herself hacker, by the way, at the age of 8. So I think kids are now there, and we are investing. The way we invest, so we have a PMS. So my money is in the PMS myself. I have invested in PMS, but on the unlisted side, we try to find out small companies from small towns. They are doing really wonderful things. We have met one company recently in a kind of Zomato in a different space. Wonderful guy. They are doing quite a good amount of work. A lot of small towns. I'm telling you, India is doing wonderful. You go to this belt of Baroda, Rajkot, Himatnagar, on the deep south, Bangalore, Tamil Nadu, you will find young guys. They are doing wonderful stuff, super engineering work and all. So I am very positive. I believe a lot of new things will come, and we are investing in in our own way, whatever we can invest.
Okay, so you don't do the traditional investing, mutual funds and Sukanya Samriddhi and all that for your kids?
So I don't have any investment in mutual funds, but my wife does some Sukanya every year. I don't know why, but she does. But yeah, I'm not a big believer of real estate or gold or any of those things. I believe startups, small ones, good ones. I've seen how money can be made there. I've seen as I said, Microsoft I'm tracking from 99 maybe. I've seen what kind of money can be made if you are putting in the right technology, right spaces. So I'm very, very optimistic all those places. And I believe that we will make lot of money.
So one final word, right? What's the next Microsoft over the next 10 to 15 years?
I don't know what will be the next Microsoft, but I can tell you it will be somewhere from India. And second, I will tell you that I believe today AMD could be a big dark horse. So, you can see big money to be made in AMD in next 5, 7 years. The way you saw money to be made in NVIDIA. And I know that, they are doing a lot of stuff on the GPUs and they will do well.
AMD is in the same space as
Yeah,
NVIDIA, right?
absolutely. But they are much smaller.
Okay. You're saying the growth will continue in this semiconductor, in this chip making.
Because till AI is and AI will be there because now AGI will come. So you will need more and more GPUs. And more GPUs means you have to work with these 2, 3 guys. And AMD has done good investments in R&D. That data also has captured. And if you see, they are doing good. And I believe that the odds of risk reward odds are better in AMD now versus NVIDIA. Let me put it that. Very my personal belief. I don't have coverage on them. I have not invested yet.
Maybe the time is now then. But Sandip, thank you so much for joining me. And I'm sure we'll do a round 2 of this because, this space is evolving so much. So as and when anything interesting comes up, I'll definitely love to have you on the Money Mindset. Thank you so much for joining me.
Thank you, Sonia, and thanks to the queue as well. Thank you. Have a good day.